I think investing in other markets provides you some diversification. Certainly, if you're in a high cost area, you're not going to get much cash flow. So if you're investing for cash flow, it's better to go to some other areas that are still growing, so you get the best of both worlds.
Welcome to the Going Long Podcast. We're back once again to continue to help to educate you so that you feel much more comfortable as well as confident investing beyond your backyard. And yes, I am your host and I am super excited to be here. My name is Billy Keels, and the content that we're having for you today is going to help you to move further even faster. And so we're very, very excited about that. And if it's your first time here, just a couple of things I did want to say. You are part of a great podcast family that continues to move up and up the charts primarily because of you. You continue to take action. You continue to download the episodes and take the action, the information that you learn and put it into action. And if you have not already, if you could just take a second also to make sure that you're leaving an honest written review as well as rating, especially if you're there and you're on the Apple Podcast platform. We've even made a really short video for you. You can do that there. Like I said, if you have not had a chance and you've received even just a little bit of value from any of the previous episodes, you can go to the video. We'll show you, but also most importantly, make sure you leave your honest written reviews and ratings. So with that, a lot of you are also asking the questions like, where can you go find previous episodes? If you go to billykeels.com, once you're there, you can go to the podcast tab and you can find every single episode that we have ever done. Once again, it's billykeels.com. Once you're there, go to the podcast tab and you can find every single guest we've ever had as a guest here on the Going Long Podcast with Billy Keels. So lastly, a lot of you are also interested in being part of our accredited investor club. Now we're going to get together. We're going to talk about things that are important to other accredited investors. And also we're going to get a chance to see some of the different opportunities, investment opportunities that we have that are exclusive for accredited investors. So just feel free to go to, or send an email, AIclub@billykeels.com. You can send an email to AIclub@billykeels.com. You and I'll get in touch and we will get you part of the community and it's going to be great. So if you're interested, once again, send an email to AIclub@billykeels.com. So with those things out of the way, wanted to talk to you, especially like if you are someone who lives in an appreciation-based market. So like one of those markets where really is extremely expensive to buy anything. Think California, think Berlin, think London, think Los Angeles, any of those types of places. And you're just kind of like, look, I don't really know what to do here. Well, actually, we have somebody who is going to be sharing exactly what it's like to grow up in one of those markets before it's like a huge appreciation market. And also, it's going to help you realize that even though you're out there and you're probably making a lot of money, you realize at a certain point, it's not just about money. And you are looking for a higher quality of life and some of the different changes that you can make in your life. Well, today's guest is going to share exactly what he did by moving from one place to another and really looking for quality of life. And at the same time, really catching a wave, which was fantastic. So you're going to learn a lot about the different tools that you can use. One of them being real estate to help you to get to the lifestyle that you're really wanting to lead. And I am absolutely sure that today's guest is going to really help you understand a lot. I'm looking forward to having you listen to the conversation with Arn Cenedella, and we're going to get to that just after this. Whether you're an active investor or a passive investor, you really like your day job and you want to continue to go into your day job every single day feeling better, knowing that you've created the right options for yourself. At the same time, you just don't have enough time to really get your head around, spend all the hours investing long distance. Well, one way or the other, over the last number of years that I have been investing long distance, I've really understood a number of the major mistakes that you should avoid if you want to get to creating the right options for yourself much faster and being able to create more income sooner. And if you want to do that, if you want to understand more about that, I've made it really simple. You can just go to billykeels.com/7 mistakes to avoid. You can learn all the things that the 7 major mistakes that I've seen over and over again that I want you to avoid. Once again, you can go to billykeels.com/7 mistakes to avoid. If you're looking to understand how to leverage the efforts of others and how that can propel your long distance investing success, then guess what? Today's the conversation I promise you're really going to want to listen to until the very last word. You know why? because today's guest has done so many awesome things. But listen, just kind of getting started. Spent over 25 plus years heading a family-owned real estate company in Menlo Park, California. No one's ever heard of that city, I'm sure. And he was doing that, focusing on residential sales as well as property management. And then from there, continued to build on that and spent another 22 years in real estate sales and brokerage, focused really at this point in time on income generating assets. And then from there, you know what? He was looking for a change of pace, and he went from one coast to the other to be able to capture a higher quality of life as well as ride the wave of an economic boom. And it gives me great pleasure to welcome to today's conversation the founder of Spark Investment Group, Arn Cenedella. Arn, welcome to the conversation, man.
Hey, thanks. I don't know if I can live up to that introduction, but I'll try. So great to meet you. Looking forward to speaking with your listeners, and hopefully we can both provide them some great information.
You know what, Arn, just from the pre-conversation, we don't even have to hope. I'm absolutely sure that today you're going to be able to help so many of the Going Long family, giving them new ideas, helping them to think in ways that they hadn't thought before, and giving them really practical, tactical examples on how they can drive whatever their life strategy is and moving that forward. So as you know, Arn, you're going to get 5 questions. You're going to get 2 in the beginning. You're going to get 3 in the end. And then kind of in the middle, you're going to give the entire Going Long family the opportunity to really learn a lot from you and basically the success that you've had up to this point in your journey. And then, well, you know what? In the middle, we're going to really get a chance to get to know you. So with that stated, very first thing that we always love to know here at the Going Long podcast is help us understand, where do you live in the United States?
Sure. It's a great question. So I live in Greenville, South Carolina. Grew up, spent most of my life in the San Francisco Bay Area, Silicon Valley. And literally 7 years ago, my girlfriend and I moved to Greenville, South Carolina. My little background is the Liberty Bridge in Greenville, and downtown we have a river, a waterfall. This bridge goes over it. Fabulous place to live. Geographically, we're in the northwest part of the state, up in the foothills of the Blue Ridge Mountains. And for real estate investors, you'll be happy to know we're midway between Atlanta, Georgia, and Charlotte, North Carolina. So we're right on I-85, and we benefit from a lot of the same growth that's happening in those 2 metropolises. Greenville's smaller, of course, but very vital economically. Many of your listeners may be interested to know BMW builds every X car in the world in Greenville, Spartanburg. And in addition, Michelin has their North American headquarters here. So Greenville's a diverse community. Maybe 10% of the people are European, and they're over here working for Michelin and BMW. So great place to live, great place to invest, and love to tell people more about it as appropriate.
Yeah, fantastic. We're definitely going to jump into that. And you make me think of about a couple of different things that kind of that whole corridor between Atlanta and Charlotte. I own a mobile home park that is just outside of the Charlotte area. And it's definitely one of the booming Southeast kind of area within the United States. And, I've been flying from Europe frequently, actually have had a number of people that I've met flying from here back to the U.S. that talk about the South Carolina area because of the large focus on automotive industry and then the automotive supply chain. So it's interesting. So even a lot of consultants as well in that area.
Precisely, yes.
Yeah, which has been fantastic. So also too, and that was really helping us understand where you live in the U.S. What is the most positive thing that's happened to you in the last 24 hours, Arn?
Well, lots of positive things happen. I guess the thing most germane to share with your audience is I currently have a multifamily syndication underway, and we completed our raise yesterday, $4 million acquisition with about $1.5 million raise. Took us about a week to raise it, so it went well. So quite happy with that. Of course, there's a lot of work to do to get it across the finish line, as you know, but it's a milestone when you complete your raise.
Fantastic. 1.5 raised in 7 days. That's just over 200,000 a day. Fantastic. So congratulations for that. And it always is fantastic to hear these types of positive momentum building types of stories, and just to remind us that yes, everything is possible. It's just a matter of putting a plan together and then executing against that plan. So thank you for sharing that. And then, you kind of mentioned it before, Arn. I give myself this really impossible task of trying to tell your story, which is in like 7 seconds, right? I try to do it in 7 seconds. It's impossible. Like, you've done so many different things, and I tried just to do that, just to help the Going Long family connect with you and all these kinds of things. But could you do us a favor? Could you actually tell your own backstory in your own words? And the one question that I guess I would ask, or the favor that I would ask of you, is if you could also think about some of the major decision points that you've made to get to this point in your journey. And then from there, you and I will take the conversation and see where it goes.
Sure. So I'll do my best. And I would say I had a pretty typical middle income American upbringing, solid middle class, was expected to go to college, went to grad school, graduated from the University of Michigan, go blue. And then I thought I wanted to teach. I thought I might want to be a research scientist, but I decided that isn't what I wanted to do. So I called my father, who was in the real estate business back in the Bay Area. And he said, well, come on out, get your license and go to work. So real estate was not part of any big grand plan. And enjoyed my education. It was a great time, learned a lot, but I just wanted to take my life in a different direction. So joined the family real estate company. And I think one of the key things I learned from my father was, while the brokerage business can produce income, really financial independence and security, financial wealth is created through investment. And so I built my brokerage business that generated the income and the kind of cash flow and capital that I needed to start an investment program. And was quite successful with that. Obviously, living in the Bay Area, it's a great real estate market, so I did well. And generally, I was a pretty hands-on property manager, maybe a little egos involved. Oh, nobody can do it as well as I can. But then it dawned on me, my time spent better doing other things. So then I started investing out of area, using property managers. That led to moving into multifamily, where I've probably made 7 or 8 syndication investments as a limited partner. And I can tell you honestly, I'm ecstatic about 6 of them. So maybe 1 isn't going quite as well as I'd like, but all the others are going fabulously. And I've now started doing my own syndication. So the current deal I'm doing is my 5th syndication as a general partner. And so there's just kind of been an evolution. Completed my education, got into real estate, had started investing single family, saw the wisdom of going to multifamily, letting other people do what they do best, allowing me the time freedom to do what I do best. So that's kind of been the transition over my 30, 40-year career.
So I think that's fantastic, where you get to a point where you really, the evolution is to get to the point where you really focus your time and energy on what you do best, and then being able to allow others to do what they do best. Therefore, you are able to spend your time doing the things that you love the most. And that could take, 5 hours a day, or that could take 2 minutes a day. Doesn't matter, but you're using the time in the way that you want to do it. And the other thing is, because you said go blue, I guess I should say go Bucks, of course.
Yes, you can say go Buckeyes too. So that's perfectly fine. Yeah.
No, we like to have a little fun here. We like to have a little fun here. So you said a couple of things, though, right? So as you went to work in the family business, it's not common, Arn, that we hear people say that as you were working, when you were in the property management side of things, I believe you said in California, that's something that most people do, because a lot of people are like, I can't find anything in California to be able to invest in. Typically, those people are talking about cash flow. But I'm just curious, when you were managing properties, right, as part of family-owned business in California, who was the typical investor that you were, or the maybe not investor, but who was the typical client that you were managing assets for?
Sure. So just to provide a little more background, I got into the real estate business in 1978. So values were significantly different. And so over my career, I would say real estate values in the Bay Area probably 10x, 20x. And so it was a little easier to start investing in 1984 than it would have been in 2004 or 2014. So you're certainly right today. You're not going to get cash flow in the Bay Area and so forth. I would say most of my investors were associated in the tech industry. Obviously, Silicon Valley's known for that, making high incomes. They already own their home, and we're looking to buy rental properties both in the Bay Area as well as out of the Bay Area. So generally, I would say had a connection to the tech industry, making fairly good money. Also very demanding jobs. Very demanding professional jobs, 50, 60 hours a week easy. And so they needed professionals to manage the properties for them. So I'd locate them, find them appropriate investments, and then handle the property moving forward.
So number one, you're helping us understand the perspective of time, right, over anything, because you are in 1974, no matter, I guess, any location you would have been in, but specifically in an area like Silicon Valley, there's been significant appreciation. You were very kind, saying 20x. I would even probably go well beyond that, probably 30 or 40x in the area. But also, too, if you even fast forward to today, there are still a lot of people, maybe not today, because you mentioned 7 years ago you went from coast to coast, but when you were last there, that are a number of people that were in these high demanding jobs, 50 to 70 hours a week, which is, I work in the IT industry as well. And that is not uncommon for highly paid professionals in very demanding roles. So I think a lot of people forget about that. You make a lot of salary because you're working typically a lot of hours in a very demanding kind of area. But what were the people, right, these high paid professionals that were looking to also invest in California? Did you find that they were looking more for wealth preservation? Were they looking for cash flow? Were they looking for kind of tax shelters? What would that profile that you were finding at the time looking for?
Yeah. So that's a great question. And of course, the answer is all of the above. But I would say for many of my clients, one, it was kind of a diversification strategy, because they had company stocks, they were doing IPOs, stock purchase plans. So most of them had most of their net worth in the stock market. And so I think, one, they wanted to invest to diversify. And I think also just a recognition that real estate is a good investment. It's a tangible asset. Over time, it's almost certainly going to, increase in value. And so for those people, I don't think it was so much cash flow immediately. It was more building a legacy wealth, diversifying, preserving their capital, but having it work for them. Many of them have children and there's college to pay. And of course, there's expenses. So I would say that's kind of what their goal was, to invest.
Okay. And that makes a lot of sense, right? Being able to diversify outside of the paper assets, because a lot of people that I know that in my day job, that they're focused on paper assets. And maybe there's something to it. You're just saying this, and I hadn't really thought about this before, but I know that a lot of people that I'm surrounded by, a lot of accredited investors and IT sales professionals specifically, and sales leadership, they're used to dealing with the intangible, so things that they don't typically touch, right? Because it's software. And so it's almost the kind of the same way in the paper asset world. You have possession of things that you don't ever touch because nowadays you don't actually receive a stock certificate. It's just kind of this digit versus making the change or the switch to something that is actually tangible, something that you can see, something that you can touch, something that you can go and visit. So sometimes I've found that there can also be initially a little bit of a disconnect, like, hang on a second, I can actually go touch that. And okay, well, cool. And eventually once you realize that not only can you touch it, but on a very frequent basis that it can kick off cash, then that's very different than in the stock market where it doesn't, you have to actively do something for it to kick off cash. I don't know. I felt like you wanted to say something.
Precisely. Well, I think the other thing I would say is many people, they're super intelligent. They're super good at what they do. But there is a reason for specialization of labor. And so I have seen experiences where people will go off and buy one or two houses out of area. And while they're a superstar in their business, they don't really know the real estate business, and problems crop up and they're dissatisfied and it's a hassle and they don't like it. Mm-hmm. So I think for those people, if you can present a pathway to real estate investment that saves them from some of those day-to-day hassles, I think it really appeals to them. They've got kids' soccer games, little league, ballet. They're busy at work, maybe at their church. And we all know in this contemporary world, we're going 24/7, 365, and it's hard to put more on your plate.
Yeah, we only get 24 hours a day. And so you have to decide what you want to do, which is one of the ways that we talked about in the beginning, right? Is how do you leverage the efforts of others in order to be able to get to a level of success that you are looking to attain in your life, whatever that may be. So speaking of one thing, and it goes back to the whole premise of this podcast, is a lot of people typically say that you need to live in the same place that you invest. Right. And maybe you did that for a number of years where you were living in the same place, you're investing, part of a family brokerage, or you were on the sales side generating income. And then you realized, well, hang on a second, to go to the wealth, let's look at actually on the investing side of the equation. I fundamentally believe that you do not have to live in the same place that you invest, because I've been doing this for a number of years. And a lot of the people that are here watching us on whatever video channel they're on, or they're listening to us on their podcast while they're running or whatever, also are starting to think the same or already believe the same. But because this goes against popular culture, and you've talked about actively investing and passively investing, you mentioned that you already done 7 different as an LP and 5 as a general partner. First question is, are all of those type of either general partnerships that you're leading or limited partnerships, are they all in Greenville, South Carolina right now?
No.
Okay.
No. So
somehow I knew that was going to be the response.
Yeah. So I can tell you there is a focus in the Southeast, and not so much because I have to be right there, but I believe the Southeast is growing. The other area I have investments in is in the Mountain West. So I'm invested in Boise, Idaho, and Colorado Springs.
Awesome. So just because I love that, right? So you're in geographically, you're different locations, but because that goes against popular culture, which most people say, if you're going to invest where you live, like invest in your backyard so you can go see the property, you can learn a lot more what's going on, blah, blah, blah. When people go against the popular culture, which is either actively or passively investing in locations that aren't their own, like I really would love for you to share once again with the Going Long family, like how did you get the mental fortitude to be able to say, okay, I'm going to invest in this type of an asset in a location that I don't actually live in? Why do that?
Great question. So fortunately, we have the internet. You can do a lot of research online. You can get population statistics, job growth. I often subscribe to the local newspapers of areas that I'm investing in. It costs you a couple bucks a month, but you're getting the local news. I would say the real key, though, is to find people to work with who are in those locations that you trust. Yeah. So local knowledge is important in real estate investing. It doesn't mean you have to have the local knowledge to invest. You have to have a team of trusted professionals who know that market. And then at that point, they handle the heavy lifting and you can invest in other markets. I think investing in other markets provides you some diversification. Certainly, if you're in a high cost area, you're not going to get much cash flow. So if you're investing for cash flow, it's better to go to some other areas that are still growing. So you get the best of both worlds. You get some cash flow during the hold period, but you also are getting appreciation. And so the overall return is very good. It's just you have to have those local operators who know those markets and do a good job for you.
Yeah. And so not only will they do a good job for you, but you go back to the basics, which is number one, to your point, you don't have to know the information, but your team sure better know the information, right? Because when you're talking of placing hundreds of thousands of dollars of investor capital, you need to understand why you're going to invest in a certain location. And more importantly, why you are entrusting this capital to a specific team of people that are going to be managing it on the day to day. Wow, don't you just love this conversation? This is amazing. This is fantastic. And so just really quickly, I just wanted to remind you, for those of you that are looking to create more options for yourself, get there faster, and do that with long distance investing, make sure that you go to billykeels.com/7 mistakes to avoid so that you can avoid all those mistakes, get to your goals faster and sooner. Once again, that's billykeels.com/7 mistakes to avoid. Now back to the conversation. You also talked about something that I think it would be really insightful, Arn, for you to share with the Going Long family, because one of the things that you talked about is if you're looking to create cash flow during the hold period, and then also one of the types of locations that can allow you to do that, and then also have some of the upside on the appreciation over a certain hold period, whatever that hold period is. For some people, that may be the first time that they've heard it put that way, but help us understand, how can you as an investor, either passively as a limited partner looking for cash flow as well as upside, or as a general partner for the locations that can provide you more of the types of opportunities that will give you that cash flow during the whole period and upside at the end? What should we be looking for?
I would say, look where the jobs are going. Look where the population's going, because the population's going to follow the jobs. And then I think also there's an issue about affordability. So I think if you're investing in areas where housing's a little more affordable, you can find that sweet spot where you can buy, and I'm a multifamily investor, so I'll speak about apartments. Mm-hmm. If you can buy units at a price where the rent you can collect will generate a cash flow, that's the kind of numbers you look at, where, for example, in the Bay Area, you're not going to be able to buy an apartment unit that will cash flow. The price is just too high, but you still want those growth areas too. And if I could back up and speak about syndication and general partners,
yeah, sure.
One of the things potential investors should understand is most of the compensation a general partner receives is on the back end of the deal after successfully executing the business plan. So I think when you invest in syndications, the people running the deal are motivated because their compensation is a function of how well they do. And ultimately, they get their compensation at the end as opposed to upfront. So I think it creates a situation where interests are aligned with the investor and the general partner.
So making sure that you have a aligned interest is something that's absolutely key. But we have a lot of high paid professionals that are here. That are doctors, lawyers, and a lot of IT sales professionals, right? And so this is also too one of the things that, as you're talking about now, like they're making compensation on the back end. How would I know if I'm spending 70 hours a week as a sales professional, making, a lot of money, multiple mid figures of, and I don't know enough yet to know if they're getting paid on the back end, up front, in the middle? Like, what are some of the things that I could be looking at and I'm going to put myself in the limited partner position to know if the deal that I'm looking at, our interests can be aligned, and also it looks like the partner or the general partner or the key partner or whatever is going to get paid on the back end.
Okay, so I would say, starting with the investment summary would be a good place. So all of these offerings have investment summaries. They generally are also presented with webinars where you have the ability to ask questions, but they will, through the investment summary, show you the income received, primarily rents. They'll show you what the expenses are, operational expenses, taxes, insurance, repairs, maintenance, property management. They'll show you a net operating income less the debt service. That will show the cash flow. And in most of these deals, almost 100% of the cash flow goes to the limited partner during the hold period. And you can make some calculations to see kind of what percentage of your return is from cash flow and what percentage of your return is from the ultimate profit or appreciation of the property. So I think you should work with operators who are willing to discuss this with you to the degree that you want. You can get down into the spreadsheets if you want. I find also what happens is after investors have made an investment or two with an operator and it goes well, there's an element of trust built there. And it's kind of like, hey, I've invested with Billy twice. Those deals went nice. He's got another one. I feel good about it. I feel good about Billy. I'm going to invest. So I think there's also building of the personal relationship that's important.
Okay. Yep. And that I would definitely agree with you that the building of the personal relationship is one of those things that is absolutely key, especially in terms of generating a long-term relationship. So actually, I wanted to ask you something on the limited partner side and then pivot to the general partnership side and talk a little bit more about Spark Investment Group. But on the limited partner side, you mentioned just from your experience that you've had, I believe you said 7 limited partnerships, and not all 7 of them have gone according to plan. Did I understand that correctly?
Only one hasn't gone quite according to plan.
Okay. Were you expecting 7 out of 7 to go according to plan?
No, at the age of 67, you kind of realize stuff happens and, some of it's in our control. Much of it is outside of our control. The one property that hasn't quite performed, I've been in it about a year. It was a very heavy lift, Class C value add deal. Mm-hmm. And we were still dealing with COVID. Everybody knew it wasn't going to generate a lot of cash flow out of the gate. We bought it at such a low price per door number that the cash flow right now is almost immaterial. It's going to be on the back end. That being said, there have been a few stumbles out of the gate. Nothing that is ultimately going to impact the deal, but it wasn't a big surprise. If you go 6 out of 7, I'd say you'd be pretty happy. It would be like if you pick 7 stocks.
Right.
Are all 7 going to go up? Right. Probably not.
Well, and Arn, so this is the perspective that I love, right? Because I think a lot of times there's also this like love affair. People are, when you've done the stock market and that's what you've done your entire life, and then you watch a lot of podcasts and even, members of the Going Long family that are here today, like say, okay, well, great. There's guests and Arn's talking about this opportunity. He's got 7 opportunities. And like, it's very difficult to bat 1,000. Like it's very, very difficult. And so number one, it's just the realism that you bring. Like not every single investment that you make performs to standard, and some of them actually lose. They don't even go anywhere close to what they were supposed to do. Now you're just sharing a part of something that's, you've been in it for a year or so, but also too, did you go into it with the mindset that, hey, listen, this is going to be a heavy lift, and I know that there is some additional risk related to accomplishing this business plan?
Yes. It was apparent to me that it was going to be a heavy lift. Yes.
Okay. So was the upside on this particular opportunity really, really much higher than most? And that was what made it worth going forward, even though it was a little bit risky, or I don't know, heavier lift?
Yeah. That's a good point. I like the market that it's in. I like the operators. I knew the payoff was always going to be at the back end. And in a day where it's hard to buy units for less than 100,000 a door now in a market, it's very competitive. We paid less than half for these units. So we paid about a quarter of replacement cost. So at the end of the day, I know it's going to work. Where I have Class A deals that just run right out of the gate, maybe not as much upside. And that's the other thing is a limited partner. You can diversify. You can have a couple Class C deals. You can have a couple Class B. You can have a couple. It's like buying, Microsoft and then buying an IPO, right? Yeah. You like a little diversification. It's like a little bit of Bitcoin. And you can do that with multifamily syndications too. So I kind of look at it as a portfolio wide thing. And over time, I know real estate's going to be good. We have issues with housing affordability. Rents certainly aren't going down. They're not building affordable housing or not nearly enough. So I think everything stacks up that long term it's going to be a winner.
All right. Well, I appreciate you giving us that reality, right? Not every single one is a home run. It's a moment in time as well, as you mentioned, yes. Over the execution of the entire business plan. Confident that you understood what you were getting into, and then whether it hits exactly on plan or a bit off plan, every single opportunity is different. But as you mentioned, you like the location, you like the operator, and you saw some things that provided, hey, listen, I know it's going to be a heavier lift, but the upside could be significantly more. So, hey, listen, we're going to go and move forward. So, and I love that idea of the IPO and versus a blue chip stock. So, do you want to say something else?
Sure. I think the other thing is, for people who are considering starting to make those investments, you don't have to go all in on your first deal, right? And so I think there's some wisdom if you have a pool of capital that you want to deploy, you deploy it in several different opportunities. And just kind of start slower and get your feet wet, see if you like it, see if it's working for you, and do it that way. So you don't have to go all in. I think kind of testing the waters is a good way to do it.
So, which is fantastic. Being able to get out there, test the waters, see the different, also too, you get a chance to really see what's out there. You get more experience as an investor, which is ultimately over the period of time is going to help you as an investor. So we talked about the LP. I want to pivot a bit because I do want us to spend some time before we get into the going long final three on Spark Investment Group. And so you talked to us about the limited partner perspective, but also too from a GP perspective, right? I'm sure that you've gained a lot of experience as an LP, and also you have lots of experience from on the ground and having seen it from brokerage and from property management. And so maybe talk to us a little bit about how you are going out today with Spark Investment Group, helping others that are looking to do what they do best during the day and making sure that they're getting more chances to get to their financial goals and freedom and creating new options for themselves. And they're looking to be limited partners. So maybe talk to us a little bit about what you're doing.
Yeah. So appreciate the question. So first, let me say it's a big responsibility handling other people's money and capital. Okay. And so there's a level of responsibility I feel that's important to me. My name means something to me. My reputation means something to me. So it's a task not taking lightly. So what I try to do is use my 40 years of experience in real estate, work with my partners who bring in different skill sets, and the entire team is well-versed in all aspects of kind of property analysis and operation. And so I probably look at 10 or 15 deals a week. Most I discard fairly quickly. Others I get in, I maybe go do a drive-by, do a little bit more research. when we make an LOI, letter of intent, we're discussing it. Once we get it under contract, we go into the due diligence period. And that means we look at everything from the roof to the plumbing, sewer lines, and we'll meet in an office and we'll kind of challenge each other. Well, why do you think we could get the rents to here? And so there's a good discussion, and we really try to fine tune our underwriting to make sure that the numbers we're presenting, we believe in and can produce, so we can produce the returns for our investors we project. If we can do better, great, but we want to be able to provide what we promise. And so there's quite a bit of effort going into that. It's something I take seriously, and it's a big job. It's an important job to help people do this.
Without a doubt, and I completely agree with you. I mean, I know moving into the syndication side of things and the general partnership, I remember just thinking the first time, like, hey, listen, this is massive responsibility, because it's not just my capital. It's like my reputation. It's my relationship that I have with someone else. And you want to be able to do all of the things. And I love that you talked about the due diligence and what are the steps that you're taking, not only on paper, but actually going out to see and visit and these types of things. So it's great to hear that you have such a passion for this on the general partnership side. And I'm sure that a lot of what you have done on the limited partner side, meaning investing with others, has also helped to formulate the way that you go out and have you and your company serve your investors.
Yes. And I would say I've had a very good life. I've had generally good work-life balance, and it's all been due to real estate investing, right? And so to help other people be able to do that, so they can kind of have the freedom to live the life they want. I work now because I enjoy it and I want to work. It's not because I have to. Okay, I do it because I like to. It satisfies needs that I have to be mentally stimulated, and the relationship part is a big part of it. So real estate is done very well by me, and I'd like other people to be able to benefit from that. And understand, even me, 50% of my net worth's in the stock market, 50%'s in real estate. So I'm not one of these guys that go, I got to go all real estate. No, diversify is great. Have a little bit of lot, and you'll do okay.
Yeah, when you're specializing in something and leveraging the efforts of others and making sure that their specialization is helping you to ultimately get whatever that goal is. And many people have the goal of time freedom ultimately, right? And choice. And so whatever vehicle you choose to do that is fantastic. I grew up, I didn't even understand what investing was. The way I grew up is, if you had extra cash in the bank at the end of the month, that was investing. I would now call that saving, but it's part of the evolution. And then you go into a lot of other things, but there are so many different tools available. And I love the fact that you just share that one of the tools that you have found that helps you is real estate, as well as other tools that are out there. So fantastic, Arn. I appreciate you sharing that with us. And listen, the thing is, we've got to get to this lightning round of the going long final three. The thing is, I never ask anybody though, Arn, unless you tell me that you're ready for me to ask you the going long final three, the lightning round. Are you ready?
I'm ready. All
right. I knew you would be. So here we go. So we started with you over on that side of the pond, and I like to bring it back on this side of the Atlantic now. So help us understand, what is your favorite European city that you've either visited or is still on your bucket list to visit?
I visited, and I would say it's Florence, Italy. So I'm of Italian descent. My grandparents came here, and Florence, when you think about Michelangelo and Galileo and Da Vinci, and they were all there at that same place, at that same point of time, and kind of the impact they had on human civilization. Not to mention the River Arno is there. So maybe that's where my first name came from. So Florence is a great town. We hope to get back soon. And so I would say that's my favorite city. My girlfriend's favorite city is London. So she loves London. Yes.
All right. So she loves London, and she's going to listen to this. So, hey, listen, shout out to your girlfriend.
Give her a shout out. Yes.
But you vote for Firenze, which is perfect. So,
yes. Yes.
All right. Sounds great. So listen, question number 2. And the thing is, Arn, here, so this is like one of the things that I've recognized from really successful people, because I have been very, very fortunate to have met a lot of successful people in my life. And I get to see a lot of successful people like yourself here on the podcast. And this is just kind of one of the things that we do, but also in the goal of sharing with others. One of the things that I've noticed about really successful people, and the reason that they tend to be very successful, is because they, like so many other people, or unlike so many other people, they typically don't make any mistakes, which is what allows them to get further. They're just, I get all nervous when I usually ask that question. No, it's kind of a joke. That's an inside joke with me and the Going Long family. It's a Going Long family joke.
People
it's
actually
a joke.
do make mistakes.
Yeah, yes. You know what? But here's the reality, Arn. And we kind of joke about this, right? Every week, somebody's running on their treadmill, laughing, going, "Arn is doing this," and but anyway. The reality is I do get a chance to meet and speak with a lot of very, very successful people. And one of the things that I have found is that successful people typically make a lot of mistakes, like way more mistakes than most people, a whole lot more mistakes than most people. But the reality is that very successful people do one thing very, very, very differently. And this is what sets them apart, is that they typically stop every single time and learn from the mistake so that they don't make the same mistake twice, right? And they put different steps in place to mitigate and minimize the chances of that ever happening again. So if you could think of not the mistake or the learning opportunity, or however you want to describe it, but most importantly, Arn, what was the one lesson that you learned that you know is going to make a massive positive impact on the entire Going Long family today, so that they get closer to their goals much faster? What's that one lesson you want to share with us?
You can't do it all yourself.
Love it.
They say multifamily investing is a team sport. I think you got to associate with the right people who have the right skills. And as I first got into multifamily real estate and syndication on the general partner side, I didn't have my right team put together. I was still missing one or two aspects that I needed. And it resulted in a lack of confidence for me to proceed. Where if I had properly put together the team initially, I could have taken down some of those opportunities earlier than I did. So I think the thing I learned is build your team first, then go out, find the deal, get the right team put together, and then that will lead you to the next step, where if you try to cut a step and you don't quite have your right team put together, I think you're going to run into trouble.
Fantastic. So make sure that you are building the right team. Once again, coming back to one of the things we talked about in the very beginning, is being able to effectively leverage the efforts of others in order to move forward closer to your goal. So once again, great lesson learned. And I appreciate you sharing that with me and the entire Going Long family, which brings us to the Going Long question number 3, the final 3, is I always love for you to help us understand how we can feed the mind. So what is the one book, Arn, that you would recommend to the Going Long family today?
Well, the one I'm reading now is Imagine Heaven. So my family has recently suffered a loss, and I'm not a religious guy, but it's a fascinating book to kind of think about what heaven may actually be and kind of what really is our purpose here on earth. So that's what I'm reading now, and I'm finding it fascinating, and it fits what I need at the moment.
Fantastic. So number 1, I appreciate your vulnerability, sharing that with us. And then number 2, helping us once again with Imagine Heaven, how we can continue to feed the mind, feed our souls, and also being able to look for, continuously looking for new ways to understand our purpose here on this earth. So
precisely.
You know what? I'm actually just thinking about from the very beginning of this conversation, and you were talking to us about your undergrad work, and then being able to go from there to a family business, and then from there to not just focusing on residential sales, but also property management. From there, you then talked about how you got into the income producing assets. You started realizing, well, hey, listen, I'm on this side of the equation, and that's really cool because I can create income. But wow, I'm really understanding that it's the investor side that is generating wealth. And I kind of want to be on the other side. And so you took these years of experience in working with many people that were investing in properties, and you were in California and Silicon Valley before the boom even happened. You saw this 40 or 50 or 60X kind of happen. And then you decided also too for your life. And I think this is so key for so many people, because everything is not just about money. You made a life decision to go from one coast to the other, to go for a higher quality of life. And also we're riding an economic boom in the area of the place that you're living in the United States. Since then, you've continued to invest. As you mentioned, you use the tools of the stock market. You've also gotten involved more on the investment side of real estate and done seven limited partnerships. You're now on the other side of the table for general partnerships with Spark Investment Group, and you're helping others to be able to bring their goals, their dreams to you, so that you can also help realize those for other people. And I know in the way that you're doing things and the way that you've explained this and given us not just strategy, but tactical examples of how others can go about doing that. I know that so many people in the Going Long family are thinking to themselves, Arn is super awesome, cool. And I actually want to get in touch with him. I want to find out more about what he's doing, more about Spark Investment Group. So help us understand, Arn, what's the best way for the Going Long family to find out more about you and get in touch?
Yeah, I'm on Facebook and LinkedIn. Website is investwithspark.com. So it's pretty simple. My email is arn@investwithspark. So reach out. Be happy to have a conversation about real estate or just life. I'm talking to a client later today who lives in the Bay Area, and her and her husband are thinking of making a life transition, an adventure. I'm excited to talk about her. And I think, to a certain degree, you just got to go for it, right? A very wise counselor once told me, you can't know the answers. You can only live the questions.
Wow.
So
great.
It's kind of get out there and live and try it. And the answers will reveal themselves by living them. Yep.
I love that. So invest with Spark. You can check it out. Going Long family. Also Arn at Invest with Spark, I believe you said. We're going to include that in the show notes, the way to get in touch with you. And I would also ask the one thing, especially with Going Long family, and you all know this already, but when you reach out to Arn on LinkedIn, make sure that you let him know that you heard Arn and I speaking here on the Going Long podcast. It's just going to help the two of you connect much faster because you both have a point of reference. Make that a personalized invitation when you send it to him on LinkedIn. So
I appreciate that.
Yeah, sure. Arn, listen, I really appreciate you investing your time with me and the entire Going Long family. Thanks so much for today's conversation. Really appreciate it.
Hey, thank you. Great to meet you. Love your energy.
All right. Fantastic. Thanks so much. And really quickly for the Going Long family, this was an awesome conversation. Once again, Arn really shared everything. I mean, he brought it all. So I'm sure that you have also appreciated his investment of time with us today. I know that you're going to go out and make it an awesome day. So continue to do that. I'll be waiting for you here on the very next conversation. So make it a great day. And thank you very much. Wow. Don't you love hearing from top-notch experts in the field? When I was getting started, I really wish that I would have had access to such experts. And even more, I wish they would have given me like a really simple list of things to follow so that I could have gotten to my goals much faster and been much happier even sooner. So that's why I've created for you the 7 things that you should avoid in order to be successful in long-distance investing. And you can pick that up really easily by going to billykeels.com/7 things to avoid. And also, if you liked today's episode, don't forget to leave a 5-star review. I'm looking forward to seeing you on our very next episode, so go out and make it a great day.